So one of the areas that the IRS pays particular attention to when processing tax returns is going to be the earned income tax credit. Now, the earned income tax credit is a refundable credit, which means that even if you don't owe any money in taxes, you can still get a refund because of the earned income tax credit. The earned income tax credit is designed for individuals who make lower amounts of money to middle levels of money. So there are some income thresholds that we have to deal with. Even though we're not dealing with a lot of money in some of these situations, the IRS still flags some of these because of the potential for abuse. So we want to be very careful when we're looking at things like, do we have a qualifying child? So in this video, what I'm going to do is I'm going to talk about the requirements in order to claim the earned income tax credit. So who can claim the earned income tax credit? We're going to talk about the thresholds as far as the income levels. We're going to talk about how much the earned income credit is worth. And then we're also going to go ahead and talk about qualifying children and what classifies as a qualifying child, because a qualifying relative is not sufficient. It has to be a qualifying child if you're going to be using that to increase your credit. So even though this is part of my 1040 step-by-step process, this is a little out of order because I pushed this one before I get to the actual credit amounts. So that way this has been released in case you were trying to file early. I wanted to make sure you had access to this video. But let's go ahead and let's start taking a look at the requirements for our earned income tax credit. We phase in initially. So what happens is you want to be making more money, because the more money you make, the greater your tax credit is going to be. So there's a degree that you're going to want to make that money. Eventually you're going to hit a level of income that's going to be giving you the max credit, and that will continue to exist. So you can continue to make more money, and you're still going to be at the max credit. But that only persists for so long. Eventually what's going to happen is you start to exceed a certain threshold, and now your tax credit is going to start to decrease. So now you're phasing out. Okay, so you have a phase in, you have a plateau, and then you're going to start phasing out because you made too much income. And then eventually, once you hit the maximum level, so what's going to happen is you're going to then be at zero. You're just going to be cut off. So you have phased completely out, and you're not going to get any tax credit at all. Okay, so that's what we're looking at. That's where we're focused on. Now on this table, I have the max AGI. I should be more specific. So what it's going to be is going to be the max AGI over a specific amount is where we completely cut off and we're not going to get any of our tax credit, or earned income. Okay, so if either one of them exceeds the threshold, then we're not going to get the tax credit. Now, don't worry, we're going to go through the threshold amounts, and we're going to take a look at that so you'll have that information, at least for the current year. But I just wanted you to kind of see what the structure is in terms of the requirement of having that income, and how the more you make, it can increase your credit, but eventually you hit a threshold, and then it starts to decrease it, and then you're completely cut off. All right, well, let's start looking at some of the requirements in order to qualify for the earned income tax credit. All right, so let's look at these requirements. So we already know that we have to have some type of earned income. So we're looking at things like AGI or earned income. It has to be below the phase-out amount, right? We already talked a little bit about the phase-out amount, but I'm going to get into the specific numbers here in just a little bit. So let's put that to the side a little bit. But just know that there is a requirement there. There's a income cap that we can have on that. Second one, in terms of filing status. All filing statuses are okay, but not married filing separately. If you're doing married filing separately, you're not going to qualify for the earned income tax credit. So that's a significant reason not to go married filing separately. Third one, you have to have a social security number. All right, it doesn't say you have to be a U.S. citizen, because you can be a resident alien and have a social security number. So if you can qualify for a social security number, great. If you're an undocumented worker, you're not going to be able to get a social security number. So what happens is you go and you get an I-10 in order to file your taxes, but the I-10 is not going to be sufficient in order to allow you to go ahead and claim the earned income tax credit. The next one's going to be citizenship. And I just referred to that one, U.S. citizen or a resident alien all year. So you've been in the United States all year. Foreign income, so no Form 2555. So I'm going to go ahead, I'm going to skip that one, but if you have foreign income, you're going to want to take a look at Form 2555. It complicates what we're doing in this particular video. Investment income cannot be $11,950 or more, so it has to be below that. if you're going to have investment income. Again, because this earned income tax credit is designed for those that are more lower to middle wages, they want to make sure that they're not giving this refundable credit to individuals who are bringing in more money or that have all kinds of investment income and things like that. If you do not have any children, you can still qualify for the earned income tax credit if you meet all these other requirements. The thing is, if you don't have children, then there's this age restriction that comes in. So if you're below the age of 25, you're not going to qualify for the earned income tax credit. Or if you're above the age of 64, you're not going to be able to qualify for it. So if you do not have children, then you're going to be, and I mean qualifying children, then you're going to be between 25 and 64 years of age. And then if you do have children that are going to, you have qualifying children, then there's the age limit does not apply. That's not an issue for you. So the issue is qualifying children. Now, what I'm going to do next is I'm going to go through and I want to look at how this interacts with other types of benefits, because a lot of times when somebody's claiming the earned income tax credit, they may have another type of benefit and they may be concerned about it. So I want to spend a little bit of time talking about how it impacts other types of benefits you may be receiving. And then what we're going to do is we'll start looking at specific dollar amounts for the current tax year. So let's go ahead and look at those other benefits first. All right, so here's some other types of benefit programs that you may be wondering if it has an impact on it. And you can see on all of these, there is no impact. So whether it's going to be Medicaid, SNAP, which sometimes goes by food stamps, SSI, public or subsidized housing, that the earned income tax credit will not impact that. So we don't treat the earned income tax credit, the refundable portion of it, is not going to be treated as income for purposes of these other benefit programs. So that's a nice little benefit on there that you don't have to worry about having that extra refund portion, then coming in and saying, hey, look, now you don't qualify for something else. So I did want to make a quick note of that. But let's start looking at the threshold amounts and start figuring out, are you qualifying for it based on income and how that works? All right, so this is going to be our maximum amounts that we can look at. And you can see that it depends upon the number of children you have. And as I previously mentioned, you don't even have to have children, but if you don't have children, then you get to the age requirements, right? So you're getting into that 25 to 64 age requirement that you have to be in order to qualify. So here's what we're looking at. If you don't have any children and you're single or you have head of household, you're looking at $19,104 is going to be the maximum amount of earned income or AGI that you're going to have. And then if you're looking at married filing jointly, it's $26,214. Remember, if you're married and you file separately, you don't get this at all. So it's either going to be single, head of household, married filing jointly areas right inside here. So the thing is, if you made, say you're married filing jointly and you made $26,215, you don't get any of this. Or if you're single, head of household, and you made $19,105, you've completely phased out. You're no longer qualifying. So this is the maximum amount that you can make. Anything above it gives you a zero credit. All right, now you can see with children, up to 3 children, it starts to increase. So once we have 1 child, we go from, instead of 19,000, our threshold becomes 50,000. And for married filing jointly, instead of 26,000, it becomes 57,000. 2 children, we increase a little bit more. It now becomes 57,000 and 64,000. And then for 3 children or more, then you're looking at 61,555, 68,675. So you can see where it starts to increase as you have children. The big one is going to be from no children to 1 child. That's where the significant increase comes from. Then you have moderate increases from that point on. And if you look at it, there's really not even that big of a difference between single head of household and what you'd have for married filing jointly. You might think, oh, look at it doubles on here. So if you're going to be single with the 1 child, 50,434, maybe it would jump up to 100,000. That's not the way that this particular tax credit works. It just increases a little bit. Any amount above this amount, maximum amount is going to say nope, no tax credit at all. Now, of course, as I showed you the structure before, there's a level that the more money you make, the greater your earned income tax credit can be. Eventually you plateau and then it starts to decrease as you make money. And once you hit these levels, that's where we're at the cliff. That's where it just completely turns off, right? So we no longer get that tax credit at this particular level. All right. Well, let's go ahead and start looking at how much the earned income tax credit actually is. So is it really that big of a deal that everybody claims it to be? Well, let's take a look. So this is a maximum amount that you can take depending on the number of children you have. All right, so we already looked at the income thresholds. We've already looked at the general requirements of what you need to do in order to be able to qualify for this earned income tax credit. Well, this is the amount that you're looking at. So if you don't have any children, you're between the ages of 25 and 64, and you're meeting the income threshold, so you're at the max amount on your income thresholds, then what you're looking at is $649. It's going to be the maximum credit you're entitled to. If you have a child, it jumps up to $4,328. So when I say you have a child, it has to be a qualifying child, and I'll talk about the qualifying child requirement here in a moment. We'll briefly talk about the qualifying child. I do have a separate video that walks you through qualifying child versus qualifying relative. We're just dealing with qualifying child as it relates to the earned income tax credit. So the next thing is going to be if you have 2 children. Well, now the maximum credit is going to be $7,152. 3 or more children, it's going to jump up to $8,046. Now, notice that's the maximum amount of the credit. Like I talked about before, if your income is low, very low, maybe you didn't even phase in enough to take the maximum. Well, then you won't quite get the maximum on that. Or after you pass the plateau, it starts to phase out. So maybe you're getting less than the maximum again. And then, of course, if you're past that threshold, you're not going to get any. But this is a maximum amount of credit that you're going to be entitled to. In terms of the calculation, your program's going to go ahead and it's going to calculate what your actual tax credit is going to be. So I'm not going to do the math portion for you. I don't want to complicate things with these videos as you're working through your taxes and trying to figure out how you determine whether you're going to qualify for the earned income tax credit. But let's go ahead then and let's take a look at what the requirements are in order to have a qualifying child to determine whether we're going to be able to claim one of our children as a qualifying child, because there are limitations with that. All right, remember to go ahead and subscribe to this channel if you're finding these videos helpful, so that way you can continue to receive updates as new content is being produced, especially during tax season, so you're taking control of your tax season. Now, what we're looking at is we're trying to actually focus here on whether we have a qualifying child. So the first thing we have to look at is that relationship test. Now, when we're looking at the relationship test, you know, when you start thinking, oh, qualifying child, I know what a child is. Yeah, so I mean, the traditional sense is going to be a child, right? It's going to be maybe your biological child, a stepchild, adopted child. Fine, that's absolutely correct. But it's even broader than that. So if you meet the requirements to be able to claim your younger sibling can go ahead and count as a qualifying child as well if you're meeting the requirements. Now, it can't be an older sibling. It can only be a younger sibling. And same thing, it can be a descendant. So it could be something like a grandparent can claim their grandchild as a qualifying child if they meet all the other requirements. I do want to caution you, though. Only one person can claim a child on their taxes. So let's say grandparent and parent both qualify to claim a child as a qualifying child. Well, there's tiebreaker rules, and only one of them is going to be able to take it. So parents generally going to have the right over a grandparent. But sometimes it's going to be different than that. Sometimes it's going to be things like a divorced couple, and they both qualify for them because they split the time, whatever, and they're going to be able to claim the child. Well, there's tiebreaker rules for those types of situations as well, and eventually it gets down to AGI after we get through a couple other tests, such as who had the child longer and things like that. If there's enough interest, I'll go ahead and I'll do a separate video on the tiebreaker rules of who gets to claim a child. So if I see any interest in the comments, then I'll go ahead and consider doing a video on that. But we first meet the relationship test, okay? So remember, we're dealing with a qualifying child, so this can't be a qualifying relative. So we're not looking at the qualifying relative type of situations where, you know, can you claim your uncle and can you claim anything like that, or your roommate who's not working? No, this is a qualifying child only for the earned income tax credit. Second one is going to be the age requirement. So they have to be under the age of 19, or if they're a student, then they can be under the age of 24. Okay, so if you're a college student, your parents may be able to still claim you, and they may be able to get the earned income tax credit based on that as well. So that's our traditional definition for it. For the same thing when we're looking at whether you can claim a person on your tax return at all. So we're using the same definition. If you're not a full-time student, you're 19 years of age, you decided to take a gap year, you're not going to go to school, well, you know what? You're not going to your parents aren't going to be able to claim you as a dependent, and they're not going to be able to get the earned income tax credit on that. All right, So the next one is going to be residency. Residency. So what happens is the qualifying child has to live with the person who wants to claim them for more than half of the year. So they have to live with you for more than half of the year. Okay, now here's the thing with that. It is okay for gaps inside there. So if somebody went off to military for military service, if they were in the hospital, if they're a student, a college student, that's fine. We see those as temporary absences, and that temporary absence goes ahead and it's going to be fine toward the residency portion of it. So students, even full-time college students, are going to be oftentimes meeting the residency requirement necessary in order to claim somebody for as a dependent, as a qualifying child, and for the earned income tax credit. And then finally, they have to have a social security number, so you have to have a valid SSN, not an I-10. It has to be a valid social security number in order for that to be a qualifying child. All right, well, that is our topic for the earned income tax credit. I hope this helped you as you're working through your taxes. Just make sure that you're meeting all these requirements and maintaining some documentation in case you're ever challenged on this. But this is a refundable credit, extremely valuable to you. So if you do qualify, make sure you take it. Because I'll tell you what, there's millions of people out there every year who are not taking the earned income tax credit. And if you're watching this video and you've not taken it before and you've qualified, don't think, hey, I can't get it now. There's still a statute of limitations of 3 years. You can go back and you can file an amended return and you can still get this earned income tax credit. It's refundable, so you're going to be able to get a refund on that. All right. Well, I hope this video was helpful. Thank you.